Now look at today, right now. We're in the exact same summer window as 2023 and 2024. Prices behaving almost identically. Alts are grinding down yet again as we get into that red zone. People are screaming weakness. They're calling for new lows. They're saying the bull run is over, but it's just the script playing out again. The market doesn't move in straight lines. It breathes, it coils. And that being said, and let me be crystal clear again, past performance is not an indicator of future results. I am not saying go out and blindly buy alts. I am pointing out that historically speaking, this almost always happens. And I am still bullish. And the thing to remember is that crypto isn't operating in a vacuum. This seasonal pattern isn't just some weird crypto quirk. It aligns with broader macroeconomic cycles. We've compared Bitcoin's performance this year to NASDAQ in post-election years, and the correlation, it's kind of spooky. The average performance of the NASDAQ in post-election years often looks like this. January, green. February, red. March, red. April, green. May, green. June, red. Bitcoin's performance so far this year is lining up very closely, although it might break the pattern this June. Still, that would make it 5 out of 6. Either way, if this pattern continues to hold, we expect a small recovery, a little bounce in July, then another potentially dead August and September. Right in line with what our crypto summer red zone indicator shows. But then what happens? October, November, December, green, green, green. A massive Q4 rally. And this lines up nicely with the historical crypto averages we've just looked at. And then you add the cherry on top, the Federal Reserve. What are they expected to do? Any guesses? Rate cuts. The market is pricing in the first rate cut around September, just as we're exiting the summer slump, just as we're entering that historically bullish Q4. A period of low liquidity and chop, followed by easing monetary policy and a historical tendency for a Q4 pump. This isn't seasonality. It's a macroeconomic coiled spring. The timing is potent. A quick break to thank Origin Protocol for sponsoring today's video. Whilst most of the market is stuck in chop, some projects are still quietly building, and Origin is one of them. They've been operating for years, survived multiple cycles, and continued to grow. Right now, they're launching a new on-chain mechanism where protocol revenue is used within the ecosystem starting in July. No new token emissions, no speculative pumps, just product-driven activity backed by real protocol usage. Their suite of products already secures over $210 million in total value locked across Ethereum, Base, and other L2s. Origin is aiming to return protocol revenue to participants in the system, and that includes upcoming buybacks funded directly by the DAO. We're watching closely to see how this model performs as the market evolves. If you want to dig deeper into what they're building or how the system works, check out the links in the description. Big thanks to Origin for supporting this channel. Now, back to the alpha. So yeah, this market is dead. It feels dead. It looks dead for now. But that death, that boredom, it's a signal, not a death sentence. This is when conviction is built. This is the period where smart money accumulates. We've seen that by how much ETH BlackRock is buying. And by the way, I have seen some of you in the comments saying technically BlackRock isn't buying. It's ETF investors buying through BlackRock, so on and so forth. And yeah, that's technically true, but BlackRock buys are often bigger than their ETF inflow, suggesting they're buying in anticipation of more interest in the ETF. On top of that, BlackRock is building products and services on ETH, so BlackRock are buying and investing in ETH, period. And they're doing so when the weak hands get chopped up, frustrated, and eventually capitulate right before the real move. For a while this year, I even caught myself thinking maybe I was too late for the big plays. But looking at this data, this historical pattern, I'm not too late. Most of us aren't too late. We're too early. And being early, if you have conviction and patience, is a powerful position. Every bull run has its pain phase. It's the consolidation phase. It's why the fuck am I still here moment. This is it. The summer slump, the boredom, the frustration, and if history is any guide, if those patterns repeat, this boring ass summer gives way to a violent Q4 breakout, the kind that doesn't wait for you to get comfortable, the kind that rewards the people who were paying attention whilst everyone else was asleep. So, here's your checklist, your game plan for surviving the summer and crushing Q4. Don't panic in the chop. This sideways grind is designed to shake you out. Don't let it. Zoom out. Look at the seasonal patterns. Stop expecting instant gratification. Crypto has conditioned us for quick pumps. This phase is different. It's about patience and strategic positioning. Use your summer to prepare, build conviction, refine your watch list, research the narratives, or take a break from the charts and have a damn holiday. Give yourself some time off, because I know I'm going to. Because when Q4 arrives, I want to be fresh and ready for the potential craziness. This market isn't dead. It's dormant. It's coiling. And when it wakes up,